Hello and welcome to the channel. Today I'm going to talk about auditing the going concern assumption. And in this video, we're going to look at the theoretical aspect in order to set the foundation for the practical aspect, where I'm going to show you the audit working paper. So going concern is a very important topic in auditing, and if you're doing an auditing exam, you often come across going concern questions. So when we talk about auditing going concern, management has their responsibility, and we as the audit team, we also have our own responsibility. So briefly, what is management responsibility as regards to going concern? So the first thing is that management are the ones responsible for managing the company. So they need to ask themselves, will our company be able to continue in the future? Okay. And when we talk about the future, we mean for at least 12 months. So that is the first thing that management needs to do. They need to make that assessment, like will we be able to continue for at least 12 months, okay? And once they do that, they need to create a plan of action. So assuming they ask themselves that question and they realize we might be having some going concern issues within the next 12 months, management needs to create a plan of action, okay? They can't just leave it like that. They need to develop a strategy. How are they going to address this potential going concern issue? So those are management responsibility. We are not the ones to do that. Management needs to make that assessment. So once that is done, we as the audit team, during our audit, will normally look through the financial statement. Once we become aware of any indication of going concern, we need to ask management for the assessment, okay? So management is going to provide us with the assessment. Then what do we need to do with the assessment? We need to critically evaluate management assessment, okay? So management will prepare the assessment. All we are doing is to just evaluate it, just based on some information. Is this assessment reasonable? Is it plausible? So that is what we are doing as the audit team. And the next thing, we talked about management creating, an action plan or a plan of action, okay? So what are some things that management can do that might indicate that they're actually creating an action plan? Management might come up with, raising alternative source of finance. Management might say, okay, the way we are going to address this going concern issue is by raising, finance from maybe our shareholders, by issuing convertible debt, or by raising equity. So they need to come up with a strategy on financing. That can be an action plan that management can take. Or management can also prepare their projected cash flow analysis, which will show that, okay, based on this cash flow analysis, they feel they will be able to continue for the next 12 months. And normally, once they prepare this cash flow, management has to provide this cash flow to us, okay? To we as the auditors, they need to provide that to us. Or also, management can also do a form of history of profitability, showing they've always been making profits, they've always been having profitable operation in the past year. So they can do a kind of trend to show that they believe in the next year or so, in the next 12 months, they are going to be profitable. Another action plan for management might be to sell maybe an existing asset. They can sell if they have a very large asset that they are not using. They can sell it off to raise funds or to support their going concern. So these are some actions that management can take on their own to address any going concern issues. So for we as the auditor, what are the audit procedures? Okay, so assuming you're an auditor, what are some procedures you need to perform? And just so you know, most times the audit work for going concern is usually performed by a senior auditor. Okay, most times it is not assigned to a junior auditor because it requires a level of judgment. Okay, so most time either the manager or a senior auditor will be responsible for performing the audit procedures for going concern. So the first thing I would want to do as an auditor is that I want to identify if there are any events or conditions that can impact the entity's ability to continue as a going concern, okay? And what are some things I'm going to be looking out for? Okay, so assuming I'm working on that audit, there are some stuffs I'm going to be looking out for that might indicate to me that this client is having some going concern issues. The first thing I might note is that working capital. If they're having a negative working capital, insufficient equity, that might give me an indication like, I think this company might be having a going concern issue. Another thing is I can read through the board minutes, and while reading through the board minute, I might see an indication of maybe their creditors or their suppliers saying, you know what, beginning from next month or beginning from so and so dates, we are going to withdraw our financial support to your company. Once I see something like that, I begin to be alert that this might be an indication of going concern issue. Also, when you start seeing adverse key financial ratios, okay, so during the planning stage of the audit, we need to perform preliminary analytics. And what do we mean by that? We need to perform analytics relating to account receivable ratio, accounts payable, gross margin, debt to equity ratio. So during that process, if you notice that the ratios are not looking good, okay, that might be an indication. So imagine the gross profit margin is going down compared to previous year. The account receivable ratio is not looking good compared to previous year. That might give us an indication like this company might be struggling. So that might be, a going concern issue. Another thing is if the company is making substantial operating losses, okay? So assuming during the year, when you look at the income statement, you saw that in this particular year, the company made significant operating losses. That is an indication of a going concern issue. And another one can be, they are losing their key management staff, okay? So assuming during the year, during your discussion with management, you notice that the CFO left during the year, maybe the CIO left during the year, the controller left, those key management people, that might be an indication like the company is struggling, and that is why those key management people are leaving. Okay, so this is the first thing you want to do. You want to identify any events or conditions that can indicate going concern, and these are the items you are going to be looking for. All the items I listed here, and there can be more. So the next thing you want to do is that you want to evaluate management assessment. Remember, I said management will be the one to prepare the assessment. Management can prepare a memo on going concern, to support their view that we know what we will be able to continue for the next 12 months. So now they are going to present that assessment to you as auditor. What are you going to do with that assessment? You are going to evaluate it. Okay, so you as the auditor, you are going to look at it using various information. Okay, so in evaluating management assessment, what are the things you need to do? So I listed 3 key things that you need to do in evaluating management assessment. So you must ensure that the assessment management has provided to you covers a period of at least 12 months from the date of the financial statement. So if the assessment management has given to you does not cover a period of at least 12 months, you cannot use that. You need to give that back to management, and they need to update that assessment. It must cover a period of at least 12 months. And the other thing is that the assessment must be consistent with other information. So imagine you getting an assessment provided by management, and while you are going through the assessment, you are seeing some things that are contradictory to some other work you performed on that audit. You need to call management attention to that. Like, why is this not consistent? Why am I seeing information that are not consistent? Okay, so you want to ensure whatever management is providing to you is consistent with the other work you have done in the other section of the file. And also, the assessment must consider the effect of subsequent events. So if management is giving you an assessment, they must take into consideration subsequent events. So assuming subsequent to year end, they are going to be closing a line of business. Okay, management must not leave that out of the assessment. They need to include that subsequent event in their assessment. So make sure you are looking out for that management has included subsequent events in their assessment. And also, the last thing you want to do is that you want to conclude. So after your assessment, you've identified the conditions. What you want to do lastly is to conclude if there's a material uncertainty or if management use of going concern is inappropriate. Okay, so those are the two things you now want to do. So, and one thing you should notice that the going concern risk is considered a pervasive risk. Okay, it is not inherent. Inherent are those risks that are just isolated to a particular section of the financial statement, like maybe just isolated to account receivables or to account payables. But going concern is pervasive because it affects, the whole financial statement. Okay, it affects the company as a whole, so that is why it is considered a pervasive risk. Now we are going to look more into this material uncertainty, or if the going concern is inappropriate. Okay, so what is the impact on the auditor's report? Okay, because that is the main thing, because going concern is going to impact our audit report. So assuming you conclude that there's a material uncertainty, okay, but the use of going concern is appropriate, management has used the going concern, you are fine with that, but you realize that there's a material uncertainty based on the conditions you have identified, substantial losses, adverse key ratios, you feel like there's a material uncertainty, but the going concern assumption is appropriate. So in that case, we are not going to modify our audit opinion. Okay, we are going to issue an unmodified report, but we are going to include a paragraph, okay, a section which we are going to tie to material uncertainty relating to going concern. And in that paragraph, we as the auditors, we are just drawing users' attention to the fact that there's a material uncertainty that exists with regards to going concern, but the use of going concern is appropriate. Okay, so that is fine. But in a situation where you've done your assessment and everything, and you feel like management should not be using the going concern basis, okay, you feel the going concern basis is not appropriate, maybe because the issues you identified are very significant. In that case, if management has used the breakup basis, or if management used the liquidation basis, that is fine because they are not using the going concern. So what do we do to our audit reports? We are just going to include an emphasis of matter paragraph. Okay, so in our audit report, there will be a paragraph called the emphasis of matter, and that paragraph is just drawing users' attention to the fact that, be aware that the financial statement is not prepared on a going concern basis, it is prepared on a liquidation basis. So that is, we're just including that paragraph. But assuming we note that the going concern is not appropriate, but management has gone ahead to use the going concern, in that case we are going to issue an adverse opinion stating that the financial statement is not presented fairly. Okay, so in that case we are saying no, the financial statement is not, does not present the fair presentation of the company. So you are giving an adverse opinion in that case. Okay, so that is the impact of going concern on our audit report. So this is what I'm going to be looking at today. I just wanted to give a foundation of going concern. In the next video, I'm going to be looking at the actual audit working paper to show you how we perform the assessment. So I want to thank you very much for watching the video today. I'm going to see you in my next video, and bye.